Hey guys, Mike here. So we get to talk about your questions and your comments and everything. So hopefully you'll participate. There's a couple questions in here I definitely want to hear your thoughts on and stuff, as well as a small clip from a legend in the business. But as far as I'm concerned, he basically sums it up like nobody better when it comes to, talking about what I talk about a lot, which is inequality and things of this nature, and the biggest threat to the United States. And I couldn't have said it better. And it was actually a survey that was done with many thousands of people participating. And so it was some great results. But anyway, we're going to get into all your stuff, and feel free to participate, please. And it's all kinds of subjects, by the way. We're talking about bonds, stocks, retirement, the government, you name it. So again, it's just a plethora of stuff. Now, starting off with the easy stuff, we have here slather bin, or however you say that. It says talking about buybacks, right? When I talked about there's going to be buybacks coming up here in the fourth quarter, but they're in the blackout windows. And he says, wait a minute, I'm new to learning. You're saying if the Magnificent Seven start to crash, they can just buy their stock and drive the price back up. Well, in a way, and let me show you what I'm talking about here. Like Apple has spent over $600 billion in the last 10 years. This actually came out just 3 months ago, this report. So that's one company spending $600 billion on share buybacks. So when it comes to the Magnificent Seven, they make up a very vast majority of stock buybacks when it comes to it. Now, can they save their stock from crashing? Absolutely not. They have blackout windows and stuff. But can they absolutely help it go up and attract investors by buying back their stock? Oh, absolutely. That's why a lot of big hedge funds, quant funds just pile into these, because they buy back so much of their stock and they have so much cash on hand, which is what they use to buy back the stock. So, yes, hope that helps you. Now, David says, I am focused on two main things for me to buy calls. First, the dollar needs to stop making higher highs. Second, if the Dow Transportation breaks down, I am out also. And what he's talking about is the dollar. Absolutely, we've talked about that. It needs to stop making higher highs. But the Dow Transportation is something very important. I did a members video on this just the other day. It was selling this major trend line. It was getting ready to go below the 200. And it's like, if this broke, and it broke that support level, looks like at 14,468, I believe it is, then it was going to be a lot of trouble for the stock market. And the reason why is because of how important this is, right? And you can see this is one of those things that kind of tells you, and I'll get into why it's important in just a second, when a recession really is coming, honestly, because it actually starts to go down. This one does before a recession hits. You can look at 2020, you can 2008 right there. You can go over to the dot-com bubble, you can see the same thing. And the reason why this one's so important, and you should catalog this, is because transports are the backbone of this country, right? I mean, we would literally starve without it. This is your airlines. This is your trains. This is your delivery companies and everything. And so this is how food gets around. That's how everything gets around this country, okay? And so when they're hurting, when that's slowing down, it's a sign, oh boy, the economy is slowing down, and you need to take notice. And so it's something to combine with what I look at the SPX or even QQQs for that matter, see how those charts are looking up. Now, talking about recession. So I'm in the rolling recession camp. Yes, some areas have been in a recession for months. And then for those who don't understand what a rolling recession is, this term is getting thrown around a lot. It simply means that different sectors of the economy take their turns contracting, okay? And I found this right here. It was put out about probably 45 days ago, right? So we all know the housing industry is a mess, right? So the housing industry basically is the one to go into it first, right? When they start raising interest rates, so the housing industry has continued to feel like it's in a recession because obviously we're not selling in our homes. The houses are so expensive with the rates. So, that's a big one for that one. Now, what happened next? Technology industry suffered as of spring, right? Suffered a slump too with the aftermath of the pandemic. Americans were spending less time online, instead resuming shopping at physical stores and going to restaurants, things like that. Also, we started traveling. So, of course, Meta and all the rest of them, Google had to lay off employees. Then what else we do? We picked up our spending in travel, right? So we saw airline stocks go to the moon, cruise line stocks, all this stuff. So if we start to slow down when student loans kick back in this month and people actually start paying them, right? And rates stay high for longer and things start slowing to a grind, there are going to be certain sectors that are going to be hurting, right? And so big money is trying to find places to put it, right? How did it run the market up this year? It just put it all in like 7 to 10 stocks and ran the market up. That's what it did. But yes, so, and if we keep having rolling recessions, does that mean we're going to have a big recession? Most likely not. right? Because you're already having these like mini recessions in certain sectors. So you're going to hear that term thrown around a lot. Let me know what you think in the comments about that one. Now, next viewer here in Libby says, everybody that I know haven't been laid off, but their hours have been cut from 45 to 50 hours to 30 to 40 hours. And I hear this a lot. Let me know in the comments if you guys are seeing this as well. Again, if you didn't see the video yesterday, what's stunning is right here at the bottom, the 65 plus crowd. I don't think the economy, I mean, maybe it's so strong that they just want to come back and get a piece of this pie here and go to work, but I just can't imagine 65 and plus people are saying, yeah, man, I'm doing so great, I want to come back to work. I just got to think something has to be going on in the economy right here. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. The next one we talk about is short positions in bonds. If shorts on the bonds start to cover, then price of the bonds go up, and that will put a downward pressure on yields, which will propel stocks. Correct? Question mark. And Sunrisen says, generally true, but stocks went up since May, while yields also went up. If there is a recession fear, stocks and yields will fall together. That's very true. And what he's talking about as far as the Qs going up, or technology for sure, is right here. You got the 10-year yield right there, and then you have the Qs, right? And it went technology. And so it just ignored that yields were going up. Again, it's really got to do more with the pace that they're going up, right? But there will come times in the moment, or in the market, excuse me, where it says, the heck with everything, we don't care what's going up, we're going up. And that's what happened to technology, the Qs that is. So yes, if there's recession fears, they will both go down, the yields and the stocks will go down at the same time. And then flip side will be the Treasury will actually go up, like TLT and stuff will actually start to go up during bad times. As you can see right here, because they have an inverse relationship, yields and bonds. Yields go up, bonds go down, yields go down, bonds go up. You see it plain as day. Now, our next viewer talks about this same premise as far as I was talking about. One of the greatest trades ever will be when the Fed ends up cutting and you see Treasuries go to the moon, or be TLT, the 2-year, whatever it is. And he says the Fed cannot just wake up one day and decide over breakfast that they are lowering rates. It is going to be so well telegraphed so all shorts can unwind in an orderly manner. So theoretically, the transition should have some degree of order. I'm sure plenty of people will rush into bonds to get the premium afforded by a reduction in rates. John says market will sniff it out well before they do, though. And this is actually true. I think there's a truth basically halfway in between both what the viewers are saying here, but let me show you what I'm talking about. The market, whether it be the stock market, bond market, it will sniff it out well before the Fed officially announces, right? This is 2018. This right here is TMF, which is a 3x leverage ETF of TLT. You can see right there where the pause comes. The Fed didn't announce till right there, though, in February of 2019 officially. And so it had already started moving up before then. If we go and we start, adding in TLT to this, because it goes a little bit farther back, you can see the same thing happen right there during that rate cycle. And then if we scroll back, you'll see the exact same start happening. Again, this is a monthly chart here, not a daily. So, when you look at it, the same thing happens. The market will sniff it out. This is what you've seen all year long with the Qs, right? How many times you see them say, oh, they're paused, and the market will run up, and all of a sudden it'll come back down some because, oh, they're not paused yet, right? Now, one of our viewers makes a good point on this trade right here, and it makes total sense, so pay close attention. Clean carpet now, as they call themselves. The odds of something blowing up or a recession in the next 6 months seems extremely elevated. If that's the case, TLT is going to rip, and the 2025 option spreads are pretty cheap on the call side. This is very true. Whether you're going to straight call, spreads, whatever it is, I was looking at the other day, technically they do seem cheap. So it's another way to play it instead of if you don't do futures or just want to straight up buy a triple leverage ETF and hold it, which you shouldn't for long term, or buy TLT. So it is another way to go. So check that out and tell me what you think. Now we got Paul says treasuries go up, dollar goes up. When countries need to support their currencies because of the rising U.S. interest rates, they sell their collateral, which is treasuries, and buy their bonds to support their currencies. It's a doom loop. This kind of goes back when we were talking about, is Japan intervening, and are they selling treasuries? Is China still selling treasuries? But I will say this. When I was telling you the other day about how the dollar is wreaking havoc around the globe, the dollar's on top right here. You see the dollar going up? Look at all these down below. The yen, the euro, stuff like that. I mean, they've just been getting wrecked as the dollar is going up, which is, maybe good for us, especially if you're traveling these other countries, but not good for them. And so it gets to a point where they definitely will start to intervene at some point in time. And so great point by Paul there. Now, this is where I need your help here. So Sam here says, my advisor bought me some T-bills issued by local banks. Is that a risky proposition long term, or can I bank on history to repeat and the Fed bailing them out? And so I'm assuming, Sam, you're talking about these government treasury bills you bought through a bank, and if the bank goes under, you lose your money there. And so, again, I even Googled this, and I've never bought through a bank like this. So I bought through Treasury Direct when I did mine. So I'm assuming because if you're talking about government treasury bills here, these are good no matter who you're buying from, or you bought them from somebody on a street corner. But again, that's why I want to put it to the public, for people who are bond experts and T-bill experts, because I am not. And so let us know in the comments, and please try to answer Sam's question here, and we'll see if we can get an answer for you on that one. Now, the next question as well is going to be from Dan here, and he says, unfair question. Once the 10-year, 3-month uninverts, I would have just kept dollar cost averaging, but I'm retiring July 24th. It makes me think, get the blank out. I'm federal. Put hold TSP and G fund. Your thoughts? And the only thing I can quote on this one, Dan, is what my grandfather told me years ago when he was getting ready to retire. And he said, once you hit 65 and above and you're getting ready to retire, it is all about capital preservation, right? So the least riskiest thing possible, because you don't know how long you're going to live. And so again, this is up to you. I can't come here and say that. I'll get sued, for God's sakes. But, in the comments, if people want to give, their perspective, they can to Dan. Let you know what you think right there. But again, I can say when I get close to retirement, the risk is going to come down considerably. So it really also depends on what stock you're talking about, dollar cost averaging in, right? If you're talking about going into, Rivian, that's a whole different ball game versus going into Apple or something like that, So definitely try to help Dan out there. And again, for me, it's capital preservation when I'm getting close to retirement. Anyway, Bill here goes on. We were talking about the House of Representatives and how I was stunned that you didn't have to be elected or even a part of the House to be made Speaker of the House, which means you're literally the top dog in the House, right? So Bill says, why do you think it's stupid to allow the U.S. House of Representatives to elect anyone they want? Why should it be necessary in your mind to be a U.S. representative in order to be Speaker? I think it's stupid to require what you're suggesting. Well, let me just put it this way, and this is simple. Whoever goes into the White House, I want to be an elected official, because that is democracy. What do I mean by that? You might be unaware of this, Bill, but there is a line of succession. And guess who's right behind the vice president? That's right, Speaker of the House. So the vice president we elected. So having somebody come in off the streets who literally is somebody we didn't elect to be second in line of succession to the president, I know its odds aren't great, but guess what? If you'd have asked me in 1999, hey, in a couple of years, planes are going to fly into the World Trade Center and the Pentagon, and we're going to be under attack, I wouldn't have said, I would have said, no, there's no way that happens, right? There's many things you look at history you never thought would happen, but there's a reason that succession line is in place. Ask people who watch what happened to Kennedy, right? And so, yes, I want the person who's second in line of succession to be somebody we elected. I hope that's not too much to ask. Let me know what you think, Bill. And that leads me to this right here. And this is something I would say I never apologize for it. It'll always be who I am. I don't believe in forgetting where I come from and all that stuff. And to me, this is one of the biggest threats to this country. And you're seeing it play out over the last 30 years so far, and what's happening and what's happened to the middle class, for example. And this is Jeremy Grantham. I showed you a piece of this interview probably last week, maybe last Monday or something. But he goes on to talk about a survey they did and what is the greatest threat to the United States and stuff. And so listen to this really, really quick.
One of them is inequality, which I consider the poison in the system. And low rates driving up assets only owned by rich people is
feeding that flame.
Is in first place. But the bottom line was revealed in a exit poll. And it was a huge exit poll, like 70,000 in the early stage and so on and so forth. And I got the printout, which was as long as this table. It had every conceivable category. It had American Hindus, 275. And it had armies of questions. And everyone split on red-blue lines. Okay, big deal. Surprise, surprise.
Yeah. What else? No.
But one question, they all agreed. Whether they were Hindus or Christians, Republicans or Democrats, rich or poor. And that was, this is the exact phrasing of the question, this country needs to be saved from the rich and powerful.
Everyone,
And I agree
including
with
the rich and powerful. Yeah.
including the rich and powerful. This country needs to be saved from the rich and powerful. They own the regulatory authorities, do they not? They own, in a way, Congress because of Citizens United. It is their absolute right of free speech to spend the stockholders' money without revealing how much they spend, lobbying Congress.
On super PACs.
They can make a congressman an offer he can't refuse. We have 5 million here to point out that your opponent is a genius or an idiot.
Yeah.
Your call.
And so I couldn't agree with that exit poll more, or what he said. Remember, he's super rich, right? And so, of course, it's amazing how many rich people come out and even say it. They're like, oh, yeah. I mean, remember when Donald Trump was running, he told you, he said, oh, yeah. You know, it's totally skewed towards us, the rich people. But, you know, I take advantage of the system because that's the system in place, right? And that's what you do. You know, that's what I always say about us, you, whoever. We may be benefiting the system, but that don't mean the system ain't jacked for so many people. I mean, a lot, probably over half the country, right? Are just messed up by the system. But, you know, again, it's amazing how many people will go out there who are dirt poor and they'll defend these rich people and these politicians they keep voting for. And you're like, really? The system's so against you in so many ways. But again, I guess we reap what we sow. So, you know, I'm no just thank the comments and stuff. But anyway, guys, appreciate it. Enjoy it as always. Please give me your feedback and stuff. Help those people out with those questions and stuff. And we'll do it again next Saturday. So please hit the like and subscribe button. It helps people find the video. And I'll see you guys tomorrow.